This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Kim Banham, principal at Connetic Ventures. Connetic Ventures is an early-stage VC that uses proprietary data and machine learning to remove bias, increase efficiency, and create transparency. Kim, thank you for joining us.
Happy to be here and discuss some things in detail with you today, Hall, on the podcast.
Great. So tell us more about your background. What did you do before you started investing in early-stage companies?
Actually, my background is a bit different. I feel like everyone in the venture capital space ends up here in different avenues. Some have financial backgrounds or may have been a founder of a company that raised capital that went on to exit and maybe started their own fund. Prior to Connetic, I was doing sales and working for Delta Airlines, but spent 8 years living in Europe, mostly Eastern European countries. So I was in Croatia, Slovenia, Switzerland, and Hungary. And when I moved back to the States, I reached out to the founder of Connetic, which is Brad Zapp. And he was my financial advisor prior to, that's how I knew him, and started at Connetic, knew very little about the venture space, and started in a role where I was just responsible for relationships with our portfolio companies and investors, and quickly learned a lot about the space, read and did a lot of research. And when we went on to raise the second fund, I quickly learned over about a year and a half, and I was offered the position as a principal at Connetic. So taking some of my international experience of living abroad and noticing how we can, hopefully bridge the barrier to investments here in the US as well as the European market, joined the team and am responsible for the Midwest and Southeast states in the United States as well as the European market.
Cool. So what excites you right now?
Obviously, I think everything seems to be very hot right now. Our focus is especially female and minority founders, but through our process at Connetic, which I'm sure I'll probably get into a little bit more, as you said, it's a machine learning based AI platform. And what is interesting about our platform is it eliminates any bias that exists in investing, especially at the early stage. So when a company applies for funding with Connetic, we don't know if you're male, female, African-American, Asian, 20 years old, or 70 years old. And we take a very data-driven approach. And through taking this data-driven approach with companies that are fit for what we're looking for, 54% of our portfolio companies are actually female and minority founders. We're not setting out to particularly invest in more females or minorities. This is strictly through a data-driven approach. So our process gives everyone an equal opportunity. We're asking every founder the same set of questions. And based on the machine and the AI, it helps us to determine which company would be the best fit for us currently for an investment. Some companies may be too early. Some companies may have raised a large amount of capital or maybe further along for where we like to come in. But this just allows myself as an investor to spend more time with companies that we're most likely to write a check to. And given the way things are, we're interested in all industries with the exception of pharmaceuticals. And that's just given the time that it takes and the money and being an early stage VC. But really like the fintech space right now. I think there's a lot going on in that space that we like to focus on fintech, software, CPG products. So very open to investments. So most important probably is the team, the founder of the company. And if we believe, I believe that this is something that can be a very disruptive company in a sector industry that needs some disruption.
Great. And so you see a lot of startups and you see a lot of investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
I think it's really important to understand, that founder, who they are. One of the parts of our assessment is we do a personality assessment on the founder just to see how is this founder wired, not their background as far as where they went to school, where they've worked prior, if they've been at other startups, but really understanding, can they move at the speed? We all know that running and being the CEO of a startup company, you have to be able to wear every hat from sales, marketing, finance, leadership. And it's a very challenging role to take on as a CEO of a company. So I think it's really important to understand if you believe that founder has the stamina to take that company to the place that he or she envisions the company in the future. And another thing that I feel is very important before somebody writes a check is the investors that are already involved, to understand and make sure that you are aligned in what you want as an investor in the future of the company. For example, being a VC firm, we are in this for the long haul. We want these companies to grow to at least a 5x we expect on an investment. Whereas, some angel investors, they would be, they may be happy with 2x on their investment. And, there's just a difference when we have a company that would exit quickly for a small return. As a VC firm, you have to return that capital to your investors, and we can't reinvest that. So we think that it's important that as investors that you're aligned with what you both want, or multiple investors for the future outcome of a company that you're going to be giving capital to.
Great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise that funding?
I think one of the most valuable things every startup should do is have a very strong board of directors and board of advisors. As I said earlier, as a founder, you have to wear so many hats, and you need people with experience and expertise that have gone through this before, or have, experience in different fields that are going to benefit you as a founder. So I think it's really important before you go to raise any capital to surround yourself with a board that is going to help you throughout this whole journey as an entrepreneur.
Great. And so let's talk about the state of startup investing. How do you see the industry evolving from here post-pandemic?
It was obviously interesting to see how the pandemic affected different companies in different ways. And, from Connetic's thesis, when using the machine and AI approach, it was very different to some companies and startups. Prior to COVID, they were used to the traditional way of pitching investors, and having the data-driven machine learning approach. Once COVID hit, these companies weren't able to get in front of investors to pitch. So we had a record number of companies applying for funding with Connetic. And throughout the pandemic, we have been investing this entire time. We didn't slow down. We actually had to speed up during this process. So with our platform in the machine learning, we are able to have companies, as we're doing this podcast right now, that can apply for funding without having to set time for me to have a 1-hour meeting while they pitch. And it gives everyone an equal playing field, regardless of where your location is. You don't have to worry about a time change. And I think the future, you'll see, more investors probably using a little more data-driven approach, because, if you look at the industry, we're all investing in groundbreaking and different ideas that we believe are extremely disruptive, but the venture capitalists, for the most part, it's been the same process. A group of companies are pitching you and you're, deciding which pitch you like the best, but that doesn't necessarily correlate to how well a founder can run the startup and how successful he or she can be. So I think you'll see a little more data-driven approach, hopefully, in the future. And I think there's also a lot of capital that is out there because when the pandemic hit, investors sort of put the brakes on. And now it seems like they need to deploy the capital to move forward. So I think it's a great time if you're a startup or a company that's looking for funding to have access to capital throughout, the US and all different markets.
Oh, great. And so in the next 12 months, what do you think is the biggest change we're going to see in the market?
You can never predict the public markets, but obviously the private market, with the public markets being at all-time highs, this is a diversification to everyone's portfolio. And I think it's a great way for the private markets to really scale and see more capital being deployed. And hopefully, it continues to grow and, you see more innovation. We always want to see our, companies throughout the United States growing, creating jobs. It's really important. And I think now's the time with the capital that's available to multiple investors out there to be funding companies with new ideas and hopefully making an impact on the way we do business through software, or whether it's clean energy, every sector and industry, you want to see more capital going to these founders that are passionate and want to make a difference.
Great. Well, let's talk about your investment thesis. You brought it up earlier, being data-driven and et cetera. So tell us more about that and how that works, maybe from a more investment thesis point of view. Are there certain sectors you're actually looking for, or do you look just broadly across all sectors with that tool?
So we look broadly across all sectors with our tool. Our application tool that we use, our machine, is called Wendal. And when a company goes through the Wendal platform, as I said, we are using the back end to analyze what companies are most suited for an investment from Connetic. Our process is always the same. Our initial check is $100,000. So we are coming in at the pre-seed and seed stage companies, and then we follow on with up to $500,000 in future funding rounds. So it is the same process. We are going to make 80 investments from our current fund, and not all companies will receive the follow-on. This is, once they're in our portfolio, we may have several companies that are raising funding rounds, and we have to deploy, a certain amount of capital throughout each year of the fund. So some companies that are in our portfolio, we may pass on their next funding round, but the following funding round, we may do the $500,000 check. So the whole reason and the thesis of Connetic Ventures is to get into these companies early, get these founders the capital they need, especially at early stage. I know founders sometimes say it's very difficult to find funding. And, one of the things that I'm most proud of as a female investor is, as I said earlier, over half of our portfolio companies are female and minority founders. And I think it's just important to give access to capital and give these companies the money they need to get into market, to show how scalable they are, and to really ramp up and be able to bring on the team that they feel is going to take this company to the next level. And one of the things that is very important to us is the team, as I said. So we are one of our tools that we use when we do the personality assessment. Obviously, you have the CEO, but it's really important to have a diversified team. And by that, I mean different personality types. So if you have 4 technical people on a team, which we see a lot in venture capital, you're building SaaS technology platforms, and these technical people, they gravitate towards each other. They like to build things. They like to be innovative and create groundbreaking technology. But what we've come across is when you have a team with several technical people, those technical people don't want to go in front of a client and sell. They don't want to do the follow through. They want to continue to build out the best technology platforms. So what we believe it's really important to make sure that every team has a distinct leader on the team, someone that would be the technical person that's handling all the building and, the infrastructure and the coding and the background of a SaaS platform. You also need client-facing individuals, someone that can go sell the product, and also an organizational member, someone that can follow through, complete all the tasks. And all of us have a different personality type. And when you put these individuals in a role that suits our natural personality, you're going to be more fulfilled at your job. So if you are not a technical person and you're asked to build out a tech platform or, do something that is very technical, you would feel drained at the end of your workday. Versus technical people, when they build something and add on a new feature, they leave the office feeling energized. So if you're putting employees in roles and there's not a right or wrong, it's finding the right fit for your employees. And in early stage companies, this is extremely important, because if you're hiring someone for sales and they are actually an organizational person that wants to be following through with processes and not in front making cold calls, going to see clients, they're not going to be as effective as someone that is naturally more client facing. So this is something that I think is very important when, we're looking to invest. And just to see with the data-driven approach that we take, we had a particular company in our portfolio. They had 4 people on their sales team, and they used our team print tool, which is the personality assessment. And we said, you need to bring a person that is a client-facing individual. And they hired someone that fit in those personality types. This one individual did 4 times the amount of sales as all 4 of the other salespeople on the team. And as I said, it's finding the right hire that fits the right role. And that's something that I think is very important for founders and investors.
Well, that's great. So you see a lot of startups and investors out there. What do you think is the main challenge startups face today in launching their business?
Obviously, there's a lot of challenges with starting any business. And I think for anyone that's looking to start their business, it's about speed. And you have to realize when you're going to market, it may be a completely different market fit than what you were thinking once you're there. And the quicker you can make these changes and realize this isn't working, but this path will lead to more success, I feel, that will alleviate some of the challenges that these investors face, and be open and to advice from people that have been there. And that's where I said the advisory board or board of directors really comes into play. Because what we may envision or founders may envision in their head where the company's going, it may not end up at that exact spot where you think it's going to be. And to be able to pivot, whether it's your business strategy or plan to what the clients need. At the end of the day, it's all about your customer and, growing your revenue for your company. And as I talked about team, it's important, if you have a team member that is not the right fit, it's crucial to be able to be a leader and either move this person into a role that's more suited or let them go and hire someone that can actually perform and move the company forward. So I believe, it's all about speed, and that's what every founder, it's a race. Who other people have the same idea. If you think you're the only founder that has this idea, this is a very large world we live in. So it's important to be the quickest to market, the quickest to close deals, and speed is the number one determining factor, I feel like, for founders.
Then what do you think is the main challenge investors face today? For your example, yourself, what do you think is the biggest challenge you have in doing your job?
There's several challenges. As I say, there's a bias there. You have certain founders that you connect to and you like their product or whatever they are bringing into market, and you have this connection, but you have to also look at the bigger picture, the competition out there, how fast you actually believe this company can scale, the team that they have on board, and how coachable they are. So I think, to put everything aside, you have a lot of investment opportunities that come across your desk. And, it's a difficult one. And I always have investors say, what's the secret to passing our Wendal application? And there's no secret, it's a data-driven approach. If Connetic had just made 3 fintech investments, we are going to pass on a fintech investment, even if it's the greatest company and idea that we've ever seen, because we have to diversify our portfolio for our investors. So we have a very diverse portfolio across the board in all industries.
Great. Well, you see a lot of different applications and sectors with your data-driven approach. If you had to pick 1 or 2 that you think are really good immediate opportunities to pursue by investors, what do you put at the top of the list?
When you're looking, like I said, it's obviously the terms. We're a VC firm based in Kentucky, middle of America. We avoid investments in Silicon Valley, obviously, because there's a lot of access to capital. So we clearly want reasonable term sheet with something that is appealing to an investor. So that's, not anything groundbreaking, but part of the process of what we do is we want to give access to capital to these underserved markets. So if a company has the right team in place and, the terms are great, let's invest in this company after due diligence and see where they can go. And, we invest from companies that are pre-revenue to in market. But most importantly, I think, is the team that they have around them and how well we believe that they can scale.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, obviously, I've talked about a lot about our process. I know you can connect with me via email, which is kim@connetic.ventures. But most importantly, I hope that any companies that are looking for funding that are listening to this podcast, you can go to our company website, which is connetic.ventures, and apply for funding, or you can go directly to Wendal, WENDAL.io, and you can apply for funding, because we are always looking for great founders, great companies that are located throughout the United States, Canada, and the European market. So we hope to hopefully get some of you that are listening through our system and making investments.
Great. We'll put those contact details in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yes, this was great. And please, all you entrepreneurs, keep innovating. That's what we need in our country to move forward and continue making this country a better place and more innovative, and hopefully lots of success from entrepreneurs that are out there with great ideas that we're always looking to fund.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.